Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by our news editor, Ed Carson. On today's show, we'll take a look at, sell-off in the NASDAQ and the S&P 500. Dow held up pretty well. Chevron was a top gainer in the blue chip index. But before we talk about the selling in the market today, let me throw it over to Ed, who's got three stocks to watch.
Yeah, I want to take a look at Alamos Gold, which did pretty well today, but Las Vegas Sands and Meritage Homes were among the number of leading stocks that did not have good days today.
Yeah, interesting to see the dollar strong and some gold stocks outperforming today. So AGI, nice move off the 50-day moving average. All right, well, why don't we start by taking a look at the NASDAQ composite, which closed pretty much near its session low, down 1.3%. Volume is a very close call. We could end up getting a distribution day for the NASDAQ. Looks like we're going to get another one on the S&P 500. But Ed, finally, we were talking about a NASDAQ that was probably looking a little overbought after a really strong move past that 12,000 level. We saw some, sellers in the index today, but it looks like we probably got a distribution day.
Yeah, and I think if you look just at the NASDAQ, this is fine. I mean, okay, yeah, you don't like to see 1% drops, but honestly, it's still some distance to the 10-day line. This would run up quite a bit. You can't get too worked up about this. I mean, there's some other areas that more concern. I think leading stocks were the biggest concern, but the NASDAQ, I think, looks fine. If this rests here, that's fine. It's other areas of the market that you might have some more concerns, but
yeah. Well, NASDAQ still holding above short-term support levels. Let's switch over, take a look at the S&P 500, which also fell 1%, a little over 1%, and probably going to get higher volume in this index as well. We've had an elevated distribution day count, 6 headed into today. We could get 7, but the index is still holding its 21-day exponential moving average.
Yeah, and so this is sort of interesting here. It's a little different is that it was just butting up to 2023 highs last Friday, couldn't hold above 4,200. So what is this? Are we falling back into the sideways range? We could be. Or is this just a little pause coming down to the 21-day line and then after a little bit move higher? I mean, we just don't know. So this wasn't terrible. I mean, you would have liked to have it held up a little better, but it isn't showing a lot of damage yet.
Okay, and the Dow Jones Industrial Average held up the best out of the three indexes here. But after making a stand at the 50-day moving average last week, the blue chip index gave up this support level. Looks like down about 0.7% at the close.
Yeah, so that's why it held up better percentage-wise. It obviously was in a weaker position. It just had less to lose. Like some of these other stocks we're going to look at, it's one thing to have, some of them, if you lose, you lose, and then you fall again. It's like, it's starting to look a little weak. So while it held up the best, it looks the worst.
All right, let's check in on IWM. This is the Russell 2000 small cap ETF. This ETF ran right up to the 200-day moving average, right near that 180 level. Turned tail. I think it had an intraday gain of 1.3%, but it ended lower by about 0.3%, 0.4%, something like that. So that 180 level, the 200-day line, still looks like pretty good resistance here.
Yeah, and this is obviously the Russell does it by definition as the small cap index does not have any tech titans, so that has always been a problem for them. And then banks were an issue. Banks actually did pretty well today, but that is a key resistance. This is one of those areas that's really lagging, and we saw some hopeful signs, but the fact is, it has a lot of work to do.
Yeah, no doubt about it. All right. Well, we've been talking about market breadth. Even though we had pretty sharp losses in the market today, ironically, breadth wasn't terrible. It was less than 2-to-1 negative on the NYSE and the Nasdaq. Let's take a look at that QQEW. That's the equal weighted Nasdaq 100 ETF, and not looking at it, something that's broken here, Ed.
No, it looks like a better version of the S&P 500, really, sort of, it's above the 21-day line. One good day and you're blasting out towards 2023 highs, though it really wouldn't take much to get to the 50-day line again. That's part of the things. It's like it looks fine, but you wouldn't want another day like this. Another day like this would not be as enjoyable.
And again, breadth on the Nasdaq, less than 2-to-1 negative. So it wasn't a day where we saw, 3-4-to-1, losers beating winners. It was less than 2 to 1 on both exchanges. RSP is the equal weighted S&P ETF here, and this is another ETF that's getting some resistance at that 200-day moving average, and really a good indication of how this breadth in the market is. Well, we'd like it to be a little better.
Yeah, that's just been a problem for a while. You can see how the relative strength line has just been really weak on this RSP versus the S&P. And just to speak to the breadth today, yeah, it was a day. It was positive for a while, even as the indexes were falling. It's only when the indexes kept on falling. So this was one where, so today wasn't the worst on breadth. But yeah, again, you really want to see this power quite a bit above this area. It just snuck above it, and we're sinking again. And that's just a difficulty with bifurcated markets, is like, can the good parts pull up the rest of the market, or is it the other way around? It's hard to stay split for indefinitely. We've done it for a while, but there may be some limits to that.
All right, that 10-year Treasury yield has been on a little bit of a winning streak, several up sessions in a row as money, flows out of bonds, lifting that 10-year yield. It ran up to 3.76% today, and you can see it did turn lower here. But rising interest rates, I mean, this could negatively weigh on technology stocks here. That might have been part of the problem today.
Yeah, and you got to figure that's been part of the issue with home builders, and we'll get to that, with Meritage, So yeah, pulled back at this and the stronger dollar, which is related. Maybe it's going to start to have an impact at some point. That sometimes you can, the market will ignore an issue, and then at some point it becomes, yeah, that's a problem. I'm a little concerned, and that can be a issue. That's definitely not a positive for the broader market to see this coming up like it has.
All right. Well, we're always interested in seeing how semiconductor stocks are acting. We had interesting news between Broadcom and Apple today, but the VanEck Semiconductor ETF got pulled down with the broad market here today. Really, really strong move last week, and just kind of drifting lower here, down 1.4%. You see anything you like in chip stocks here, Ed?
A lot of chip stocks were like this. The chips didn't look that bad today, and it'll be very important to see Nvidia earnings on Wednesday. That'll be important for chips. It'll be important for AI, because those are areas of strength. But yeah, drifting lower. It sort of run up. Pullback was not a surprise. You can see the volume had been pretty light compared to some of the gains we had seen last week. So right now looks pretty normal.
All right. We mentioned strength in the U.S. dollar today, UUP. This is the sort of long dollar ETF that we track, and this one is getting closer to its 200-day moving average. But we did see the dollar strengthening here, which can be a weight on the market, but that did not get in the way of AGI, Alamos Gold, which rallied today and made a pretty good stand at its 50-day moving average today.
Yeah, pretty decent volume too. It rebounded. It sort of undercut the 50-day line, then rebounded. So that was a bullish move. Obviously, there's always these swings with the debt ceiling talks and with the dollar and with other things. I know that could be an impact, because clearly the higher yields have been a factor on gold. So if yields return higher, that could be an issue. But this was a bullish move. It was added to Swing Trader today. This was our stock of the day. One reason about, like, if you initiate a position around here and it goes through the 50-day line, say it undercuts today's low, that would be a pretty good sign that maybe something isn't working. Just knowing that there's a lot of macro factors out there that are going to drive this and gold prices.
There sure are, no doubt about that. All right. Well, you mentioned broad-based weakness in a lot of different growth stocks and different industry groups. Casino operators were weak, so let's take a look at Las Vegas Sands, LVS, which had been making a pretty good test of its 50-day moving average, but big sellers in the stock today.
Yeah, it had this. It broke out of here, and you could really sort of see this whole area was there and was leading the casinos, looking pretty strong. Came up here, pulled back. Okay, that's fine. And then it was at that level, just a really sharp sell-off. And now it's below the point. That old buy point is invalid. The 50-day line and that severe break was also another a sell signal. So two strong sell signals here. And this one was looking better than a lot of other casinos. So for this one to come down like that was really, really unfortunate.
Yeah, yeah, tough day for growth stocks overall, no doubt about it. Let's also talk about Meritage Homes. The home builders were pretty much weak across the board today, and again, we've been talking about the rising interest rate scenario. It's not a slam dunk that the Fed is going to hike rates again at the June meeting, but we looked at that 10-year Treasury yield, which has been running higher, and that has been negatively affecting the home builders here.
Yeah, that's clearly been the case. They actually held up pretty well given how much yields had come up, but at some point this one really seemed to be come under pressure here. So this one isn't necessarily broken in that sense of the buy point, because the buy point technically it's getting underneath here, and maybe the best buy point was here, but clearly it's round tripped of, if not a double-digit gain, pretty close to it, and that's a pretty strong sell signal. A lot of higher volume in recent days, so not a real surprise that it's coming under pressure in this environment. But it definitely shows you that things were looking so good for a while. I was like, hey, do we really need to take profits quickly or take partial profits? Well, again, this is a reason why that you may want to take some partial profits on the way up, or be quick to take them on the way down, because there's still this tendency, like with Meritage or Las Vegas Sands, you see some round trips or see big gains turns into small gains because of these kind of retreats in this still choppy, uneven market.
Well, this was the first day where we saw growth stocks really under a lot of selling pressure. Many came down in volume. You mentioned earlier, a lot of stocks in the medical products group. I mean, you just look at some of the uh, declines in Intuitive Surgical, for example, Shockwave, big decline here. So a lot of healthcare names under some pressure as well. So you can see Intuitive Surgical coming right down to that 21-day moving average. So we'll see what tomorrow brings. You mentioned we've got Nvidia earnings report. Tomorrow we've got Palo Alto Networks reported after the close. This is a high-profile technology stock, and this was kind of dancing around between positive and negative territory, and we see it up now. So we'll dig into Palo Alto's earnings reports tomorrow on IBD Live, I'm sure. So this could be a good news for tech. But we've got Nvidia earnings tomorrow, and then we've got that key personal income spending report Friday, where we'll get that personal consumption expenditures index, the Fed's preferred inflation gauge. And don't forget, Wednesday, we got the Fed minutes coming out at 2 p.m. Eastern time. So plenty for the market to digest here. Tough day for stocks today, but Ed, thanks very much for your insight. We'll see what tomorrow brings. And I mentioned we'll be talking about Palo Alto Networks tomorrow morning on IBD Live. Looks like an initially positive reaction to earnings. So if you haven't joined us on IBD Live, be sure to do so. We go on the air every morning, 9:20 a.m. Eastern time, 6:20 a.m. Pacific. We talk the market, individual stocks, trends. We do that for about an hour and a half. So we'll see you tomorrow morning. Just go to investors.com/IBD Live for more information. And we will see you back here tomorrow. Thanks very much.